Welcome to Personal Finance Reimagined. We are here to move aspiring homeowners from information overload to decision clarity on the high impact choices that define our lives. June is Homeownership Month here at Personal Finance Reimagined, and today we are tackling these big stakes, existential, expensive, high impact stakes of the housing market. So I'm Jeff Hulett. I'm a behavioral economist and I'm an educator. I teach at James Madison University. I've spent my career obsessing over how we can help the next generation navigate complex financial trade-offs. So I started in industry, but today I'm very focused on the financial education side part of this. So today joining us is Coby Hakalir. Coby is a true industry evangelist who literally grew up in the business, packaging FHA loans for his mom at age 12. With over 25 years of experience spanning sales management and executive leadership, he now helps industry leaders navigate intelligent change. So, Coby, you've dedicated your career to industry service and mentoring others. Before we dive into the flywheel of fear, which is something that you've talked about, can you tell our audience a little bit about your journey and kind of what your current mission is at T360?
Well, sure. Well, first of all, Jeff, thank you for inviting me on. I'm very honored to be here. I've been following your work, and you and I have been chatting for some time. So it's great to finally get to do this. And the work that you're doing at Personal Finance Reimagined, so important. One of the things that I talk about often is how important it is for the younger people within our industry to be educated, and for those throughout our industry to educate those younger people outside of our industry. And you're doing that work, and you're on the ground every day, living and breathing that. And I so very much appreciate it, and honored to be here. I did grow up in this business, as you alluded to. Starting in 1987. I was just 10 years old, and my mom had been working as a mortgage broker. I think it was her first job back in the workforce after she had my brother. And the opportunities were there to originate loans and to make her own schedule so that she could also run the household, which she was doing effectively. She's still in the business today. She is still a very high producing loan officer. She refuses to retire. And I'm now nearing my 30th year in the business. Several years ago,
So your mom had you when you were like when she was 5 years old or something? I mean,
she was 20.
Wow.
Yeah, she was 20 when she had me. That's right. Yeah, I'm hurtling towards 49, and she just had her 70th birthday.
Very
so
impressive.
I got in this business, and a few years ago, after doing everything from originating to leading companies, I wanted to have a different take on the industry. I wanted to do something a little bit different. I'd always had ideas and opinions about where the industry should go and what would move the needle. I didn't know when I started on this journey how much of an impact I could have. Like everybody, you think, well, what does my voice matter, and who's going to want to listen to me? But over the past couple of years, it's been pretty amazing. The amount of noise I've been able to make in the industry has been surprising. It's been humbling. It's been flattering. And really, what I'm doing is trying to set us up for the next generation. We owe it to ourselves in this industry as stewards of the industry to pass it along to the next generation. And we have a responsibility within the industry to the rest of America to be the ambassadors for financing homes. 75% of homes that are purchased today are financed through mortgage bankers and mortgage brokers and depositories and credit unions. And so we have a responsibility to make sure that those products are intact and the industry is intact, and by extension, the housing market.
So can I ask you and one of the things that I focus on a lot, even in my own life, is motivation, like the core why. So, you shared a little bit about your growing up and sort of how you found your way into the position you are now. But can you just kind of step maybe inside yourself even a little bit and tell us a little bit about what motivates Coby? What is it that gets you up in the morning? What is it that's gonna, when you get to the whatever that dash thing looks like for you, but what's gonna make your dash be very proud of?
Yeah. You're talking about the dash in between the two numbers. Is that what you're
Yeah,
talking
at
about?
the
Okay.
edges of your life, right? So,
Yeah.
and I'm
Yeah.
talking about those big motivations. Exactly.
Yeah. The big motivation is really to leave this world in a better place for my children. I have three. And I've never served in the military, but I know many who have. And one of the common themes that I hear from those that served is when you ask them their why of why they served, they'll tell you in battle they served for the man on the left and the man on the right. And having been in this business as long as I've been in it, and getting to know so many people, and employing so many of those people, working alongside so many of those people, and having so many mentors that I looked up to that were in leadership, I have a real love and care for the people that work within housing. And so the industry is important to me, and the people that work within it are important to me. That's a huge part of what drives me every day, is to make this as good a place for those of us working within it. Um, and and I think what we do has such an important part of what we hold true and dear to us in the United States, which is home ownership. And I see the numbers, and many of us see the numbers of what home ownership means to a family, not just in terms of accretive wealth, the difference between owning and renting, but also in establishing roots in a community, in having better schools, in having stability in life, in raising a family, and all of those things that we hold dear and important to us, we have a part of in the United States in the banking industry. And I think it's important that we protect it, and that we control the narrative around it, and that we tell the real stories.
So I want to ask you a question, and it relates to that motivation, which I love, by the way. That's so powerful and so well grounded, and I completely agree with. But I want to focus in on, so I'm 60, you're almost 50, so you're 10-ish years younger than me. But let's even step back from that. Let's talk about, because here's the thing, I'm in higher education, right? So my age that I serve never changes. They are always 19 to 22. It's kind of an interesting thing, actually, because the people I face literally don't change age, whereas I get older every year. But anyway, that's another thing. But
Older but better.
yeah, well, it is in a way, very
Yeah.
much so. So, what I hear a lot, and one of the things that we teach about is something we call the adaptability principles. And I put it right out there for them and say, look, for your parents, which by the way are younger than me, of course, but for your parents, getting on the housing ladder was so much easier. Okay. And meaning it was less expensive as a basically as a percentage of your total income and et cetera. But that's okay, because let's figure out how and why your parents thought about getting on the housing ladder and what was available to them. It is different today, but there are approaches. We call them adaptability principles. It's a little sad to me that we have to have these adaptability principles, but we do some really interesting things. Fannie and Freddie, of course, have some very interesting programs now that make it more possible. But the fact of the matter is, those all exist because housing is less affordable. So my question really relates to, I often hear that somewhere between housing affordability and just wanting flexibility, right? To be not want to be tied down by a house. And that becomes like the reasons, or at least part of their reasoning. But is that a genuine preference? Or is there really something the industry, is there something in our narrative? Is there something that we're doing, the mortgage industry either is doing or could do better to help engage younger people to pull them in to the market?
Yeah, the answer, I think, is that both things can be true at the same time. I think that there are those for whom, look, the world is a very different place than it was back in the 70s, and in the 80s and the 90s and 10 years ago and 5 years ago. The choices you had coming out of college 40, 50, 30 years ago, you got a job, you found a house that was somewhat relatively close to that job, or close enough so that you had a reasonable commute. And then you'd pick that to raise your family, and you stayed in that house for a while. And then maybe you moved to a different house 7 or 8 years later, whatever the average was then. But it was probably a house in that same community, or another community within the satellite range of where your job was. That
Right.
preference today to not be tied down to a house is strictly an extension of how the economy is run today, where People aren't tied down by jobs either. Most people
Right.
are not going into a job 5 days a week. Many people are not going into a job any days of the week, and some are going in 2 or 3. So that expands your choices of where you can live.
Hmm.
And so I think those preferences of not being tied down to a house are merely an extension of, well, I can really live where I want to live because I'm not tied down by a job either. So it's not the house that's tying me down. It's really the job in most cases.
Right.
Um, can we be doing a better job of educating younger people? Of course, of course. Does that change the fact that we have an affordability issue in our country? No. But does it give people that first thought towards how do I get there? The first step in buying a home is believing that you might be able to. If you think you can't buy a home, then you're right. You're not going to be able to buy a home. But if we start talking about what are the steps to get there, what are the things to put in place, how do we start having the conversations about what a down payment really is versus what most people think it is, what the actual cost of home ownership is versus what people think it is. And then we can start to figure out, okay, well, how do we get people there? The biggest prohibitor right now of people entering the market to buy a home is obviously the price of homes being exponentially higher than what they are relative to wages, which, we know the numbers. They were 2 or 3x wages back in the 70s and 80s. Now they're 5, 6, 7, 8 times wages now. And so it's gotten exponentially more expensive. Well, the answer to that is to build more homes, which that's an entire different set of issues. But the issues we have now are mostly supply side issues that are causing home prices to be out of reach. And we're still feeling the effects of the Great Recession in 2008, 2009, 2010. Those had far reaching consequences that we're still feeling today in terms of inventory, in terms of the credit box being a little tighter than it used to be. So all of those things are still factors. But what we have today is a much healthier housing market overall than we've ever had in this country. We just need to make some tweaks, and we need to be more intentional about it. And we certainly need to be educating people about what's really going on and how they can be a part of it.
Well, you mentioned something that's very near and dear to my heart as well. So, it in our classroom, we literally we use a process. We call it a simulation process, but I'll tell the students at the beginning of the semester, hey, we're going to practice getting rich. That's how many classes do you take at university that can claim that? So we kind of go from different financial topics, simulating these different things. But by far our biggest and sort of capstone experience is the home buying simulation. And so we go through a full process. I won't bore you with the details, but at the end of the day, in some ways, it's less about the exact detail of what's an FHA loan, what's Fannie, Freddie, conventional, conforming, whatever, all that stuff. It's more about the confidence. Like they're walking away, hey, I did this once. I went through a process that felt really real. I talked to a mortgage LO. I talked to a realtor that came to my class. So it's kind of an interesting thing. While sometimes I feel like we over index on details and under index just on building confidence, right? And doing things like that. So anyway, for whatever it's worth, that I'm really connecting with what you just said, and I'm glad to hear it because that's clearly a practice that we have as well. There's one thing that I will tell you, one of our adaptability principles, I'm still figuring this out. So Coby, I'm just going to run this by you, but we'll share with the students, say, look, I get it. You're going to get out of college. You're going to find that job. It may be hybrid. It may be fully remote. It may be fully in the office. You may think I'm going to move in 2 years. So all your brain is all around short-term optionality, right? How can I make sure that I'm not tying myself to something that's going to keep me from taking advantage of an opportunity in my career? So what I'll say to them is say, hey, that's fine. Then buy to rent. So here's the deal. Buy a house, and you know what? In 2 years, buy it in a really rentable area. If you can buy a duplex, that's great. But I that's what I start to think about and say, we have to figure out ways, and that may not be the best answer, but at some level, though, I'm thinking about it going, you know what? Even if you move and you don't sell it and you end up getting a property manager or whatever and turning it into an investment property, that's a win. you're still on the housing ladder. So anyway, but I'm just sharing that because it's almost like, how do we overcome that challenge, right? Which is, it's always so much easier. Not buying a house is just so much easier than renting, right? And that's kind of what we fight against a
Yeah, I
little
mean,
bit.
so it's always easier to sit on the sidelines than show up, right? But so much of life is just showing up.
Yeah, right.
And part of what I do
100%.
and you're doing that work with students who are entering the workforce and entering the part of their lives where they're going to start building wealth and start making big financial decisions for themselves. And I primarily work inside the industry with the people that are responsible for communicating with those people that you're putting into the world. So there's a meeting point for the people that I'm working with and the people that you're working with.
Right.
And both sides really need to be prepared to have those conversations. And I feel like there's a lot of preparation and a lot of training and education that needs to go on inside the industry to have those conversations, to be able to communicate with the younger people. How do I get to the next level? How do I get started? How do I start saving money? What's expected of me from a lender? I think that's probably the biggest information gap point, is that people don't know what a lender expects of them. They have misconceptions about credit. They have misconceptions about down payment. They have misconceptions about their employment, all sorts of things. And where do they turn to get their information? They turn to social media. The answers, for the most part, don't live on social media. There are answers on social media, but those are generally not good ones. And I see every day, the Urban Institute, which is a housing think tank, they just proposed a zero down FHA loan, where the typical down payment for FHA is 3.5%. But the logic behind it is what was most interesting to me about the proposal. The proposal stated that the biggest barrier to entry was people believing that they needed a bigger down payment than they did.
Right.
And that the labyrinth world of down payment assistance and grants was preventing people from executing on FHA loans. And if we just make it easier, if we just make one loan that's zero down, we'll have 14 million renters enter the market. Now, 14 million renters that have good credit and good rental history, and showing a good ability to deal with credit over the past 2 years or so. That is an enormously interesting premise, to say that the biggest barrier to homeownership, according to them, again, this is according to them, is not the actual price of the home. It's that people have misconceptions about what it takes to buy a home. Now, I don't necessarily agree entirely with their premise. And I also believe that if you flood the market with 14 million new buyers, well, we don't have 14 million homes for buyers to buy. A healthy market for existing homes is about 6 months of supply. We've been hovering around 4 months for quite some time. We're just not building enough homes. We haven't built enough homes since 2010. But it's interesting that the premise to increase home ownership, their premise was, we need a more relatable and understandable loan product, not so much that we need more houses, but that there's so many misconceptions that we need to dumb it down. We need to make it easier for people. There's some truth to what they're saying. I don't believe that their option is the right option, but there is some truth to what they're saying about closing that education gap.
Yeah, no, and you and I, we had a nice little LinkedIn exchange on that. That's why I was smiling. Yeah, I can literally argue both sides and in the middle of all those things, and and we'll talk a little bit more about this later. But just in terms of my ongoing, it's interesting as a personal finance professor and sort of really an advocate for first-time home buyers, right? For young people, I just see the whole supply side problem, the zoning, the NIMBYism. It's just like we're kind of, effing our kids a little bit, and it's just really hard to see it,
Well,
and
some kids, and the other kids are protected, because if you're the child of incumbents in the housing market,
yes,
you're in a great spot. If you're
100%.
the child of potential new entrants, well, you're behind the 8 ball now a little bit. So
Yes,
which is the entire problem of the NIMBYism, which is the incumbents protecting the market from the new entrants. Yeah, I mean, it is a problem. It's a problem that I think will be solved only by continuing to bring it to light. I have seen some things over the last couple of years that give me hope that we're starting to talk about it a little more openly, and we're starting to acknowledge it. And we'll see where that goes. But I think the first step towards fixing any problem is acknowledging you have one, and
Right.
I'm seeing signs that we're starting to do that.
Yeah, and I know, like, I know California had a big prop a couple of years ago that tried to address it, and yeah, I don't know. I feel like you're right in that I think there's a lot of heat and energy and awareness around it, and we're seeing more focus. And I think at the end of the day, what I've come to appreciate is it's not a federal problem, right? We
Not at
can't
all.
federally mandate it. It is locality by locality. And that's the whole nature of NIMBYism, right? It's like, well, I'm all for affordable housing as long as it's somewhere else.
Yeah, but
You know?
but I that actually gives me more hope than if it was a federal problem, because
Yeah.
so many. I mean, think about how much
Good point.
faster things happen on the community and local level than they do on the federal government level, and
Right.
oftentimes the federal government gets involved in something and they wind up missing the mark by 100 yards, or there's unintended consequences that they didn't account for because everybody's trying to get their own little interest into the bill, and so what winds up happening is a hodgepodge that doesn't really help anybody, or the arc of help extends rather than right away to years and years and years. So I like the fact that we can address this at the local level. That means that anybody listening to this podcast, anybody that owns a home, can choose to get involved and choose to say something and choose to help direct the future of their communities. The community that I live in Northern California, we had 5 elementary schools, thriving community in Northern California. We're now down to 3. The reason we're down to 3, young people can't afford to buy in our community anymore. Why can't they afford to buy? Because we've severely restricted the type of homes that are allowed in our neighborhoods. If we look at that, and the people driving by those closed schools every day, if they stop for a moment and think about, isn't it a shame that that school is closed? And what does that mean for my property values, that younger people can't buy here anymore, and that the community is essentially dying? If you don't have children moving into your neighborhood is dying. Like there's no sugarcoating that. That's what's happening. And if you think about that for a second, maybe go to your next zoning meeting, maybe find out what's going on, maybe think about, your next door neighbor who you just voted for to be on the city council. Like, what are they really doing?
Right.
And are they really protecting your community, or are they putting things in place that are causing your community to slowly wither and die?
Right. Yeah. No, those are great perspective, Coby. I appreciate that. You hit on something. I'm going to change gears a little bit, but you hit on something a little bit earlier about socials, and in many ways, socials are part of the problem, right? And you mentioned like the flywheel of fear or mistrust fueled by like TikTok and YouTube and others. So I guess just real specifically, how do we combat that narrative? Like, because a lot of times it feels a little bit like a conspiracy theory, right? Like the system's rigged and why bother kind of thing. And of course, if that's what your feed is telling you, that's just that's going to be a big challenge, right? So how then does first time home buyers, somebody 20 to 30 years old, how do they kind of close the gap between maybe their socials and just getting in front of a loan officer?
Yeah. It's a great question. Historically, through the annals of time, we have been people that get very excited and interested in anything sensational. There's a reason why the biggest ratings on local news are big storms moving into the area. There's a reason why when I was
Right.
growing up in New York City, every single night, the headline was a murder somewhere. And if
Right.
you didn't know any better, you would think that every day in New York City, there was either a horrible storm coming or people being murdered left and right in the streets. Now, granted, in the 80s, that was partly true. But the reality is that people respond to bad news. They respond to sensational things. It piques our interest. The only difference between today and 20 years ago and 30 years ago and 40 years ago and 150 years ago is that everybody's got a megaphone now. The amount of misinformation that can be put out there in any 1 second of any day is exponentially higher than in any decade in years past. I mean, the potential for consuming misinformation is not only high, it's inevitable.
Right.
And so that falls on an industry. If you're advocating for your industry, that falls on you, the loan officer, you, the branch manager, you, the industry professional, the real estate agent, to do what you can in your part, to use your voice, to get out there to tell the story. Are you going to overcome? There's 600,000 people in the mortgage industry. Are the 600,000 people in the mortgage industry going to overcome all of the misinformation all across social media? No, that's impossible. But you can do something, and you can use your voice, and you can get out there and you can impact people. We all have family, we all have friends, we all have social media platforms of our own. I use my voice every day. There's many of us that do as well. And slowly but surely you can help combat it. And again, you're not going to win the war of misinformation. It's just not possible, but you can win battles. And
Right.
so that's the message that I like to preach. Try to win the battle.
I love that. That's very positive and uplifting, and I think you're spot on. So we have covered a lot of ground, Coby, and honestly, I would love to keep going, and if it's okay, I would love to have you back as well, because I think there's a lot of fertile ground that so much more to talk about, basically. But really, I have two questions for you at this point as kind of a wrap up. Question one, is there anything on your mind that I just didn't ask or we didn't talk about that you just would want to share? One. And then two, if you were talking to one of my students, a soon-to-be first-time home buyer, what nugget dad-like piece of advice would you give them in their path and in their journey to get on the home ownership ladder?
Yeah, so as I mentioned before, I have 3 children of my own. My 2 older children are twins. They both recently turned 21, so they're right in the wheelhouse of the same age of the students. They're both juniors in college. They're going to graduate next year. They were born in 2005. When they were just 3, 4, 5 years old, the Great Recession happened. So they might be a little bit too young, but there are people that are just a few years older than my kids and your students who do have trauma from the Great Recession. They saw their parents' payment go up because an arm adjusted. They saw their homes lose value. They perhaps saw a foreclosure or a short sale happen. And that's real trauma that happened to a generation of children in this country who saw that. And our job is to not only correct the misinformation about what buying a home and the process and what kind of wealth it entails you to, but it's addressing that trauma as well and talking about what they saw and why that was a hiccup and what the industry has done to correct itself since then. I said earlier in the podcast that we're in one of the healthiest spots we've ever been, perhaps ever, in the housing market in this country. And while we do have elevated rates that are in the 6s and home prices that have gone up 40% in the last 6 years, we're still in a good place. Delinquency levels have never been lower. We're in a thriving market in many ways. Yes, we have affordability problems on one side, supply problems on the other side. Those are correctable. What we don't have are structural issues that are dooming our housing market. And owning a home is still the best way to accumulate wealth in this country, the most straightforward path. So what I would tell your students, who are probably a little bit too young to remember much about the Great Recession, is that being educated about these things and understanding the history of housing, super important, because as you go into the housing market, understanding the history of the housing market is just as important as understanding what the future of the housing market may be from an appreciation standpoint. So to those that are working with students that are a little bit older than yours and a little bit older than my children, I would say address that trauma. To those of you that can't remember the Great Recession because you're too young, well, great. But also make sure you learn about that period of time, because we have to learn about history lest we repeat it. But also understanding the housing market and its history, super, super important to understanding what you're getting into. But there's no question, if you look at the arc, if you look at that line, dating back as far back as it goes to where we started tracking those things, it has always moved up and to the right. So buying a home is still singularly the best investment you can possibly make.
Well, that's really, really powerful message. And of course, you are preaching to the choir here. So I am completely in agreement. And your message and how you frame it and position, I think, is really spot on. So thank you so much, Coby, for helping us provide decisional clarity and for championing the professional image of the industry for future homeowners. And like I said, I would really love to have you on another time.
Anytime, Jeff. Thank you so much. I really appreciate it.